How did the mortgage industry destroy itself and set off an economic collapse that ruined the finances of millions of Americans? Executives tend to hold themselves blameless, saying that no one could have seen the disaster coming. Well, judge for yourself after you hear the story of Paul Bishop, who worked at the nation's second largest savings and loan. World Savings of California was among the industry's most admired mortgage lenders, but Bishop says the kind of lending practices he saw were leading to a world of trouble that would ultimately result in billions in losses and a federal investigation. What does Paul Bishop say he told executives at World Savings 3 years before the crash?
We're breaking the law. Okay? We're breaking the law. You know we're breaking the law. I know we're breaking the law. What the hell do you think is going on here? You know, you're granting too many people loans who simply can't qualify.
Paul Bishop's story is a rare inside look at forces that tore the economy apart, as seen by a plain-spoken loan salesman who is now suing World Savings, claiming that he was fired for telling executives what they didn't want to hear.
I definitely talked to him about Enron. I said, we're sitting on an Enron. This is bigger than Enron. I mean, if we're doing $4 billion a month in loans. If housing drops, housing value drops, people start to default, you know, this is a nightmare. These people will not survive it.
Bishop was a mortgage salesman at World Savings in San Francisco. He'd been a top salesman at IBM and spent years as a stockbroker. And most everywhere he went, he had a reputation for speaking his mind and ruffling feathers. In 2002, he joined World in part because of its history. Who were the owners?
It was Herb and Marion Sandler.
And their reputation at that time was what?
It was flawless, as near as I could tell.
In fact, Herb and Marion Sandler were legendary. In 1963, they started Golden West Financial and grew to 285 branches under the name World Savings. The Sandlers were known for careful, conservative lending. They've given away millions of dollars to charity and started an advocacy group for low-income borrowers called the Center for Responsible Lending. In 2006, just before the housing crash, the Sandlers sold their bank to Wachovia and pocketed $2.3 billion. Trouble is, some of their money came from people like Betty Towns, who is financially ruined after being sold a series of World Savings mortgages she couldn't afford. Mavelise Brown is a lawyer for a nonprofit group working to save homeowners from foreclosure. How many times did you refinance?
Well, we refinance practically every year.
World salesman convinced Betty to refinance her mortgage 4 times in 4 years. She got about $20,000 each time.
Well, all I know that they told me this loan was best for me.
But how could it be best when Betty's pension couldn't qualify her for the loans?
But they told me that they would go by my husband's payroll.
Even though he'd been laid off from the shipyard?
No, he passed away.
Her husband, Ronnie Towns, was dead. World Savings noted that in her papers, but his former income was used to qualify Betty. What's Betty's actual income?
About $1,875 now.
What was written on her loan applications?
Over $4,000.
Who did that?
The interviewer that's listed is a staff person for World Savings according to the loan documents.
What does that tell you?
It looks like whoever typed up this document put in the number that they thought was the right number to get the loan approved.
The term was packaged. It had to be packaged correctly when it got to the underwriter.
Bishop says a story like Betty's was common here at his former office. He says facts were manipulated on some loan documents to get past company underwriters who approved the loans.
Let's not say this. Let's delete these items that they're probably not going to check on. Let's add this. Let's just move it around.
Packaging the loan meant modifying
the loan
to make sure it would pass the underwriter's inspection.
Correct. It was one grand wink, wink, nod, nod.
One person you won't see in this story is Herb Sandler. For months, we invited him for an interview, but instead, he sent a letter. He says it is categorically false to suggest that we trained or permitted employees to falsify a borrower's income. Sandler called it, quote, totally unacceptable in our culture. But Paul Bishop says he watched the bank, famous for quality, begin to emphasize quantity. World relied on outside mortgage brokers to bring in 60% of its customers. The more loans approved, the more the brokers and World made in fees.
We would have these instant underwriting events in an office where we would assemble 5 underwriters right there.
How many loans would be covered in a single day?
80, 90. We would keep track of it. 80, 90, 100 would be reviewed. Yeah. Oh, yeah.
By 2005, 38% of World's clients had subprime credit scores, and customers were shown flyers that told them that their income would not be checked by the bank.
So I don't really need to know what you make. I don't need proof. You tell me you make 200 grand a year, you make 200 grand a year.
No verification.
Not going to check.
Herb Sandler told us if there was no income verification, the bank still checked credit reports and appraisals. But we spoke to 2 former World salesmen and a former executive who made similar allegations to Bishop's. One said, quote, "It was all about volume, quantity over quality." To understand what was happening in the mortgage industry, we went to Bob Simpson, whose company, iMark, investigates failed mortgages.
When one lender dropped standards, another lender felt that they had to do the same.
Simpson says World and other lenders were in a ruinous competition for customers.
There are people inside of every institution that have been screaming for years about these terrible loans. Don't fund these. These are horrible loans. And they were routinely ignored inside of their own institutions.
Why? Why were they ignored?
Because there's no money in common sense. There's no money in stopping a loan. There's only a payday when that loan closes.
The loan World was selling was potentially risky. It's called an option arm, but at World it went by the cheerful name Pick a Payment. This is what the monthly statement looked like. It offered 4 different payment amounts that the homeowner could actually choose from, but the lowest payment didn't even cover the interest on the loan. Deferred interest would add up month after month, leaving the homeowner farther and farther behind. That's what happened to Betty Towns. World sold her 4 pick-a-payment loans, racking up $40,000 for the bank. Now her full payment is larger than her monthly income.
Hard to think of Betty without a home.
It's horrifying to think of her without a home. It's just, unacceptable.
And she's not alone. Between 2003 and 2006, the total amount of deferred interest from World borrowers choosing that lowest payment jumped from $21 million to $1.2 billion.
That's the borrower saying to you, I can't make my payment, or I'm not making my payment. Now, that was increasing at $100 million a month.
Bishop says that's when he began complaining to his bosses.
And basically it was characterized as, look, you're a malcontent. I mean, you're not happy here, you don't like it here, you don't like the way we do business here. And I said, it's all true. It's all true. But, you can't continue to do this.
Then in the summer of 2005, Bishop saw this article in which Herb Sandler boasted about the soundness of the bank's loans. Bishop told us he said this to a senior manager.
I think we have crossed the line. And there's no question in my mind that the chairman of the board, the founder of this bank, has no clue what's going on. Or he's indicating that in the press.
Did you use the term predatory lending with him?
Sure I did. Fraud, for sure, I used.
And he said what?
He said, well, I'm not aware of that.
After that, Bishop got into a heated argument with a fellow employee, and the bank threatened to fire him. He says it was retaliation for his complaints. So he talked to Tim Wilson, the corporate head of sales, and Bishop says he told Wilson this.
This is somebody's home. This is a home they can't afford. Okay, we are complicit in this. Okay, you're granting too many people loans who simply can't qualify. I mean, he said, I don't have any instance of that. I said, come down to Vicente Street, pull 100 loans, any 100.
Down at your office?
Down to my office. I said, I don't have the ability to do that, or I'd do it. Come down to the office, pull 100 loans, you're going to be stunned at what you see.
Did he do that?
No.
Tim Wilson, the head of sales, wrote this memo about their conversation, saying Bishop could not point to any specific examples of employees or loans that do not conform to company policy. And he noted, random audits are done weekly all over the country. In his letter to us, former bank owner Herb Sandler said there are hundreds of former World employees who would dispute Mr. Bishop's claims and speak to the company's focus on quality lending. He makes a point of saying that his bank kept its loans on its own books rather than selling the risk to Wall Street, which created a strong incentive to ensure that our loans were based on sound underwriting. Still, since the market collapsed, World's portfolio has lost billions.
What, in a managerial sense, failed? Your leaders either knew those loans were terrible or they didn't know, and either answer is bad for World savings.
And when the Sandlers say we didn't know?
Shame on them. They should have.
What went wrong?
Well, we ran out of borrowers. Everybody that could qualify, anybody that could fog a mirror, anybody that could just breathe, and qualify at any level, had basically been refinanced once, twice, 3, sometimes 4 times.
Herb Sandler told us that World approved only about 60% of its applications. He says his high-quality loans wouldn't have failed had the economic crisis not caused housing prices to drop by 50%. It was just before the crash that Sandler announced he was selling World to Wachovia for $25 billion. For Paul Bishop, it was the last straw. He says he told a manager that he planned to warn Wachovia, and days later, he was fired. Bishop says a lawyer told him to think twice before getting in the way of the merger.
Did anyone at World ever specify why you were fired?
To this date, they have not.
Why do you think you were fired?
I think I was right in the middle of $25.5 billion.
Did you call Wachovia?
I did not.
Do you regret not making that call?
I'll always regret it. I'll always regret it.
The losses from the pick-a-payment portfolio are now estimated at $36 billion. Wachovia was so badly wounded, it was acquired by Wells Fargo with the help of a taxpayer bailout.
We have talked to some former executives of the bank who tell us that they listened to your complaints, they investigated your complaints, and they found that there was nothing to them.
Are they employed today?
No.
Surprise. They lost their job. The bank went bust. They took down the 4th largest bank in the country with them. But there was no problem.